Hey. Oh, hold on. Am I unmuting you? I can't hear you. Well, I see you. And so not yet, not yet. But you says your mic is on. But this is Epic Lunch and Learn. I think it's episode 9. We got Yolanda Peavy. And then I think we'll have one more person. Vince should be joining us today. We're going to be here for the next hour, answer your questions if you have. Hey, we had a great discussion on Tuesday with people, coming on and just a lot of questions about real estate and mortgages, so we are here to help for sure. Definitely. So once we get this figured out, today what we wanted to do was talk about following the money. We want to talk about bookkeeping, business owners, and just how that can affect us, and what mortgage products are there for business owners. A lot of business owners still need to buy a house for their families. They still need to, grow. They also are looking to maybe potentially do refinancing as well. So we want to talk about different products that are on the marketplace for them as well. So that's what we'll do, and we will keep it moving. Um, Also, let me do some housekeeping notes that I got you. Housekeeping notes is we do have a new podcast interview with no, excuse me, Nicole Barton. Nicole Barton had a chance to sit down and speak with her about art. She's an art dealer and creates her own art. She very creative. She started a magazine and is doing some great things. She's in the Georgia area. So when you have an opportunity, check out Nicole Barton's interview that is available on podcasts, wherever you download your podcasts, or you can go to the YouTube Epic Spotlight channel and check it out there. So that's just recently released. Every week we try to do a podcast interview and, just really single out someone that's doing some amazing things and hopefully can bring you some joy and some fun with it. And then we will be having a video coming out tomorrow, a video that's coming out tomorrow. So definitely check that out where I answer some questions along the way. Now, we have changed this up a little bit to do on the Epic Lunch and Learn. Is going to try to do Monday through Thursday from 12 p.m. to 1 p.m. Central Time. That way, that allows us the opportunity to go ahead and really discuss current events, topics, just like we're going to do today, and we're just getting everything situated. Good, what's going on, Vince?
Hey man, morning or good afternoon, everyone. Sorry, it took me a minute clicking on the wrong links again. I got to clean out my inbox.
No worries, no worries. I know. That's why I try to put everything in one email because I was like, man, there's too many emails I'm sending out. I got to consolidate.
Yep. I saw Yolanda on there. Yolanda, nice to meet you. I'm Vince. Thanks for joining us today.
Yeah, she was having some technical issues just with volume. We couldn't hear her, but I think she'll come back shortly. But yeah, I was just taking care of some housekeeping notes. Basically, we do have a new podcast interview today with Nicole Barton. She joined me. She's she's just an amazing artist down in the Georgia area. She's made magazines and pictures, so really, really great. And I told everyone today's topic is business. We're going to talk about business owners and just products that are available for business owners. And Yolanda, can we hear you?
Hello, hello, hello.
Yeah, we got it.
Yay!
We're working on this technology. It's all working out eventually.
Oh,
I had problems too, so don't worry. You were off air and I was complaining as well, so it's all good.
We cannot let technology defeat us.
Man, it's scary. It really is. I feel like my grandparents back in the day when they didn't know how to work technology. I'm like, wait a minute. I just had audio. What is going on?
Man, it's funny. Right before we got on here today, I had an hour-long presentation of new technology that we're going to be using for mortgage software. And,
wow.
It's crazy just how advanced things are now. You can take an application now, you can flip it, enable it to be in Spanish, and just things, because when the application started way long time ago, it's called a 1003. We used to have to meet with people and have them fill it out. It was a manual thing. And now, Yeah, back in the day. Now, I'm the old man on the porch, but so from that capability of having to meet with someone to now you can fill it out online to now you can actually fill it out on your phone because not every application is compatible on phone. This new technology that we're going to implement, hopefully probably by quarter 4, will actually have the ability so people can actually just fill out those applications right on their phones. And I know most of them are comfortable doing so. I'm ready for Gen Z. I'm ready for millennials, and I'm ready for those alphas. I got you. I got you. So you'll be able to take the application on your phone. So that's pretty cool.
That's
Yeah,
cool.
technology in our industry we're behind, and it's trying to catch up faster than we can keep up with it.
It really is. It really is. Especially a lot of people, when they use their phone, they're trying to take pictures or they try to take a lot of screenshots of bank statements and such. And it's like, I can't use this. You're going to have to, we're going to have to pause. I need you to get to a laptop and, and then create a PDF and then send it to me. And, we're starting to move in a generation where I had a client last year specifically said, I don't have a laptop. Does everything on his phone.
Yep.
Wow.
Had to go to his parents' house to use a laptop. So technology is one of those things where we're 100% behind the industry as a whole, and we are trying to play catch up. But you have to be willing to invest that money into it. And as businesses, is the business going to want to, where to put my money to? And so that's to me is a perfect segue into business. And, I wanted to get into the bookkeeping. Why accurate books are your business GPS. You want to go into some depth on that?
Sure. I guess you actually kicked it off with just being prepared. So I like to help clients, customers, individuals recognize that bookkeeping is keeping the back of the house in order, right? You are your business. You as an individual are the front, the face of your business. But in order for you to be effective, you have to be tracking, right? You need to track in order to see if there's growth, see if there's things that need to be changed. And with bookkeeping, we help in that aspect to ensure that the money that's coming into the business is there, and then the money that's flowing out, i.e. expenses, right? So we help you manage that overwhelming process, especially depending on the industry that you're in. There could be a lot of different sources of income coming in, but we want to see which one is the most biggest bang for our buck, especially when we're entrepreneurs, small business owner, right? Every dollar needs to count, and we need to make sure that we see where the dollars are coming from. So that way, just from a customer service perspective, right? As a bookkeeper, I can help you to say, hey, this contract has grown year over year. You need to try to see if there's a loyalty program that you can, incorporate for them to let them know that you value their business, right? So as a bookkeeper, we help you to identify and to track what's going on in your business, right? The health of your business. So that way, when it's time to go sit down and purchase a commercial piece of property or even your residential home, you will be able to have the right reports to assist you in that.
What are the best ways to track business expenses? I mean, I think I know one answer, but what are some, can you give some multiple solutions for people to track?
So I'm pretty sure everybody's heard of QuickBooks. I'm QuickBooks certified, so I'm a little biased in that space, but it is not user friendly. Please hear me when I say this. It is not user friendly. They do a wonderful job with their marketing, convincing small business owners that they could do it themselves. But if you don't have any understanding of accounting or basic accounting, debits and credits, it can get overwhelming and get confusing very quickly. So there's QuickBooks, there's Wave. If you want to take it old school, you can write everything down. You can keep your receipts, take pictures of it. You can use Excel. So there's tons of software. Now Wave actually used to be free, but now they're charging not as much as QuickBooks. But again, it's what is comfortable for you when you're getting started, because we all know as entrepreneurs, you're everything, right? So I'm the salesman, I'm the person on the phone, I'm closing deals, making deals, all of the above. And so I'm also managing the money that's coming in and the money that's going out. So I like to tell people, if you know managing money is not your strong point, let's not try to pick it up now, especially as an entrepreneur. So once you start to see that your business is netting, and so to understand what net is, that is the gross, which is all of the money that's coming in minus any expenses. So when we think about expenses, think about what's required for you to run your business. Okay, so I'm gonna throw an example out. Eating lunch is not an expense, everybody. Okay, so when we worked a regular W-2 job, guess what? They gave you a lunch break, right? So, and you paid for that yourself. It doesn't change when you become an entrepreneur. So now I get to write that off. No, it depends on the industry that you're in. So the government says, hey, we know that you have to live, you have to eat, and you have to drive. This is basic necessities. So as a business, if that is not if I can't move my truck or my car to make money, if that's not what I do. So for example, I am also licensed in life insurance. So it's not required anymore, because we can do everything online, to go out and drive. Okay. There are still times that I can drive, so I can write off my miles, but I can't write off my car note, no, I can't, because the IRS is going to say, with what I do to make money, driving is not required. Now, if I'm in the trucking industry, guess what? It's required that I drive a truck in order for me to make my money in this business. So then I am able to write that off. It's the same thing with eating. There's really not too many jobs that you would have that's required for you to eat unless you're a tester. And that's typically inside of a factory. But those are examples. So we want to make sure that even if it's old school, I sealed a contract, it's going to give me $10,000, and I write it down. And then I know with that $10,000, I have a brick and mortar. So I have rent, I have lights, I have gas, I may have an employee. So those are overhead or expenses that I have to have or pay in order for me to have this brick and mortar or this business, if that makes sense.
It does. It does. And so, I heard you, but I want to make sure the audience hears you too. When should I hire you? When should I hire a bookkeeper as a business owner?
Very good question. Yay, right? So I like to explain things very simple. When we see a business netting, thank you for bringing me back to that. So we gross minus expenses give us our net. When we see a consistent 3 months of $3,000 of net income, at that point, it's now time to start branching out to look for a bookkeeper. Because at that point, now you can afford it, because we have $3,000 sitting in our bank account to now reinvest back into our business, so that way that number can continue to grow.
Got it. Yeah, no, I think it's important because, the issue, it's easy from day one if you say, hey, I'm not good with numbers. That's not my thing. I need to hire a bookkeeper. But sometimes that's not the initial thing we're thinking of on day one. Exactly. We're thinking of, hey, I got to get sales, and we're not thinking of the back of the house.
Correct.
But the back of the house is what starts the fire and gets you into trouble.
Yes, with so many different people, be it your county that you live in, or the state, or even Uncle Sam.
Right. So it's a tough thing, and I hope that this helps people definitely that are trying to become entrepreneurs, trying to be business owners, and trying to be the best you can be. You really have to find a place for a bookkeeper, potentially on day one or day 90. Once you've seen that 3 months of $3,000, I think that's important. And that's cool. Let's see. We got a question already. And I did make a comment just in case you didn't. Please continue to send us questions. That's what makes this really flow. So if you have any questions, we are streaming live right now on YouTube, LinkedIn, and Facebook. So feel free to just chime in, put in the comments a question, and let's get those answered for you. Can you explain how taxes impact monthly cash flow as a loan officer? I like that one. What do you say, Vince?
Well, obviously we live in Illinois. You're a business owner of Epic Mortgage. I am a W-2 employee, so I get no write-offs. So we don't need to go there, right? I know we have loan officers and realtors all across the country here on the call, and thanks for doing this. I know we're licensed in multiple states. There is a big advantage between 1099 self-employed contract loan officer versus W-2 loan officer. So in terms of the taxes for the loan officer in Illinois, I get my standardized deductions and I pay everything else that I have to, right? Can't get around it. It is what it is. It's documented. I know we're going to talk about business loan programs a little later here. I'd like to ask Yolanda one other question. I know you gave like a $3,000 limit in a 3-month term.
Yes.
I have an accountant, and every accountant has a different way of looking at it. When there's times that I look to start an LLC or do something different, and he's like, basically, you got a 2-year window before you really are truly going to be like flagged or on the radar. What's your opinion to that statement on my end? And I'm not trying to tell anyone to avoid it, right? But it's a hobby if it's not making money in the eyes of the IRS, is where I was kind of going.
And you're absolutely correct, right? So your accountant is correct. I stand 100% behind what your accountant advised you. So the IRS looks at it as, okay, we know with any business, you're going to have your ups and downs, ebbs and flows of your business. Sometimes it's going to be good, especially when you're first getting started. If you're bootstrapping it yourself, that means you're pulling money from your own personal resources to fund your business. So therefore, you may not make any money. You actually may be in the hole. So they actually do give you a grace period where you are able to be in the hole or be in the black or red. I forget which term fits, and they won't count it against you. And then after that third, going into your 4th year, now, yes, the business need to have some type of profit. And again, with your tax person, they may say, hey, write off everything. And that way you won't owe Uncle Sam because you're an entrepreneur. Yes and no. Okay. So when we're in a space of, yes, I'm not looking to buy anything. I'm not trying to get a new car. I'm not doing anything that requires me to show that I have debt or income, a source of income coming in outside of what I normally have. Then yes, right. The goal is, as an entrepreneur, is to create a legacy, to make sure that we're doing something, be able to hire someone in our community, grow within our community that our business is in. But when we're trying to purchase a home, commercial property, we can't write off everything. Because at this point now, the business doesn't look like it is being profitable. It's not doing anything.
Correct. Like it's not functioning.
It's just there. And so I to explain it to anybody when it comes to, trying to get a loan, trying to go see a traditional bank, even from a business perspective, trying to get a business loan. In order to get debt, you have to have debt. And what they're looking at is to see how good do you pay the debt that you have with the source of income that you have coming in. So if you're an entrepreneur, if you make $100,000 minus your expenses, you're netting $50,000. They're like, okay, well, you got $50,000 to pay back a debt if we were to extend some money to you, to try to keep it simple.
I want to add one thing to that, right? In our industry, we would call that credit depth, right?
Yeah.
What's your account look like? What's your history look like? What's the consistency of that? To the question, I know I went in a little bit of a joking matter, but in terms of the W-2, and then maybe Dante will add to this, it's basically as a W-2 employee, as a loan officer for the state of Illinois, there are certain things you can ask your company to expense and then to have them reimburse you. But every company will have their own way of how they want to do that.
No doubt. And unfortunately, it is a state by state regulation. So, I mean, in other states, you can be a 1099 employee, but obviously in the state of Illinois, adheres to us viewing us as W-2 employees. So it does affect us even in our hiring capabilities. We want to hire people and they're like, well, do you offer 1099? And I'm like, no, because I want to stay consistent throughout. But let's keep going with that example, the 50,000. So when you net 50,000, hey, I make $100,000 and I have $50,000 in expenses. And so my $50,000 net income is also known as adjusted gross income.
Yes.
And so obviously we would take a 2-year history of looking at, right now at this time, we would look at 2023 to 2024, and we would take an average of those two, as long as 24 was either even or higher than what 23 was. So if you made $50,000 in 2023 net income, or AGI, adjusted gross income, as long as you're at 50 or higher, we'll take an average. If you are at 49 and 24, then we would have to simply just go off the 24, year and take the 49,000 divided out, and that would become your monthly income. So that's some stuff we do on a traditional side. One of the things that I always like talking about is that, being a regional mortgage broker, we're licensed in multiple states, but we also are, approved with multiple lenders, banks and lenders. So we do have, what I like to call alternative income programs.
Nice.
And so alternative income programs mean we can use maybe just bank statements. So we could take a 12-month average of just your bank statement flow and see if that can get you qualified for a loan. We can look at your 1099 income, and if you're receiving a 1099, that means no taxes are being taken out. Right. And we can just simply take an average of the 1099 income if it's coming to you as an individual. We also have capabilities of no income verified assets, not only on a investment side of things, but as well as a primary, through banks that we work with. So we do have opportunities to look at things differently on an income perspective if necessary. So we, obviously the traditional route is the route you would see if you went to any big box bank. But, what separates us is the ability to, go outside the box, play in a little bit more of a wider field with our alternative income opportunities that we offer. To answer Amy's question, can you explain how taxes impact monthly cash flow as a loan officer? I mean, that's a tough question. I don't know if she's asking as a loan officer herself, or she's asking as if we were working with a client per se. So that's a tough one, Amy, really, because I would need to know a little bit more. But I would say that, we're going to look at tax returns, especially if someone is self-employed. And obviously taxes do play a role because we need to know how much they're willing to write off, and so I would segue that to say, Vince, what are 3 financial red flags that you think loan officers miss the most when we're reviewing taxes?
Well, they don't look at the returns fully, right? Because they're not getting all the schedules. They're just getting a first page. That's the one thing, right? When I have clients with businesses, especially multiple businesses, I'm asking for K1s. I'm asking for W-2s. You have to ask for all the information. You can't just look at it. So, but when you're digging into the tax return, at the end of the day, it's what's reported. Sure. Unless you're using the non-conforming products that we talked about. Also remember too, there are asset allocation programs as well that we would call non-traditional in that bucket of programs. So I'm not really sure where flags you can kind of see on a return because they need to be recorded. They need to be reported. We're pulling 4506 transcript to confirm that they were sent to the IRS. So I don't really have flags on that because to me, that's a full document program. There really isn't anything to kind of stick out because it needs to be verified.
Yeah, the tax returns changed, I think, 2016 when Trump got into office the first time. He was the one that made the changes to just the income taxes.
Yeah,
and so
and they changed the format, too, where I used to be able to look and I know where everything is. Now I'm like, wait a minute, this is the wrong spot.
Well, yeah, exactly. I mean, when we're doing taxes, we're looking at the federal portion of the taxes. Don't necessarily care about the state tax return. I'm looking at the federal. And so the federal overall went from 2 pages to now 3 pages. And that third page becomes very important. It's called a Schedule 1. The Schedule 1 is where it's going to show if you have additional, it's going to say, hey, I have additional income. And it might be coming from a Schedule C, which is generally an independent contractor or an LLC, or it's coming from a Schedule E, where you have a corporation or you own a piece of real estate or something of that nature. So we're really cognizant of, the Schedule 1 that's going to tell me you have other income coming in. And then I got to see where is it coming from? Is it coming from a Schedule C and a Schedule E? Those are the 2 schedules for the most part, unless we're dealing with it, someone that's, buying and trading stocks, like a day trader, he's going to have a Schedule B as in boy. So B, C, and E are the 2 schedules, or the 3 schedules, for the most part that we look at. And then the one thing we probably look at on page 2 of the federal tax return is if you owe any money. right? I'm always looking at the bottom to say, are they getting a refund or do they owe?
Sure.
Because if they owe, depending on the loan program, I may have to say, hey, you got to pay this off. Or B, I'm going to have to say, hey, do you have a payment plan? And I need to know how much. So those are going to be big factors, when I'm looking at tax returns.
Let me add one thing of that, and then I'll give it to Yolanda to add anything. Sorry, I didn't want to just jump in. We will need business tax returns if you owe more than 25% of the business. So just to add that, everything that Dante said is accurate. Just was missing. If you own the business and have an ownership of 25% or more, we will need business tax returns for the business. Awesome. They don't matter because what happens in the business carries over to the personal, but they will ask for them.
And then isn't it, and I'm just asking Vince, if someone owns 25% of a business and then they say, hey, I made, $10,000 in this business, I can only take 25% of that, or no?
No, I mean, you don't have to use it if there's a gain and you don't need it, but you still have to show it.
Got to show it. Okay. And once again, these are more traditional based loan programs. If we were doing a traditional based loan program and we're having to use tax returns, these are things that we're providing you with knowledge that that, hey, this is what we're going to look and see. Now we want to take a step further. We know you can do extensions. I know you guys are familiar with tax return extensions.
Yeah, that deadline's coming up 2 months.
That deadline is coming up.
15 or whatever that is, right?
So they have a business extension is September 15th, and then the personal extension is all the way to October 15th. So
as I said, W-2 employee, October 15th is what I said.
15th. That's
Self-employed is what he said, September 15th.
That's right. Right. So if you have a Schedule C, if you're an independent contractor, you have until October 15th. So technically, we still could use 2022 and 2023 tax returns right now. But we got a small window until October 15th. So if you can find a house and want to close on a house, we can definitely help you with 22 and 23. But after that October 15th date, we're definitely going to have that 23 and 24. So that's a key note for people to know. But let's answer this question for a venture show. I'm going to lead this to you, Yolanda. Is there a recommended tool for tracking real-time P&L?
Again, it is strictly on the end user. I'm going to say Wave is a very user-friendly software that helps with tracking. Your profit and loss, that's what P&L stands for, is something that's used across a lot of different industries when it comes to trying to get debt or obtain money. So it's something that the system will actually run for you. It's very easy once you have an accounting software. So again, to answer that, it could be QuickBooks, it could be Wave. There's tons of software out there. I just have experience in those two softwares. I know Wave is and that's WAVE. I know right now their monthly fee is $16 per month. Unlike QuickBooks, we're talking 30, 50, 60, even $100+ a month, depending on what you need the system to do for you. So again, it's what you feel more comfortable with, especially if you're going to be using it, i.e. the actual business owner, entrepreneur. So if we are looking for something very simple, eye-catching, not complicated, Wave, WAVE. If we're looking for a software that's going to track inventory, allow your employees to clock in a GPS from their phone, that would be more on the sophisticated side. So I would say QuickBooks. So again, when it comes to having employees tracking, that goes into your profit as well. So it just depends on the end user's comfortability. If we're at a space where we're ready to hire a bookkeeper, again, it's more or less making sure that you're vetting that bookkeeper. We're sitting down, we're interviewing, we're asking questions. How often would I meet with you? Do you run different reports for me? Can you explain the reports to me? Is there tutorials that you can show me? Because you have different strokes for different clients, right? Some clients, hey, I don't want to know nothing. I just want you to do it. I'm not an advocate of that. I think everybody should know is what money is coming in and what money is going out of their business. Not to say that you need to be actually categorizing anything, but you still need to understand if your bookkeeper gets sick, they're on vacation, you need to be able to run in and run a report or understand what's coming in. That's why it's important that you know how to operate that system, or if you're looking to have a bookkeeper that is well involved, like a minor or a very intricate part of your finances of your business, then you're going to have a much more involved bookkeeper, because not all bookkeepers are the same.
Yolanda, give your information out.
Okay, so I actually partner with a lot of different other companies, but one company that I partner with is called TNT Financial Solutions. I am one of the bookkeepers on staff there, as well as a tax preparer and tax strategist. We're located in Beverly, Illinois, and that's 10031 Southwestern. My contact number is 708-539-2439. And we're also located on the web, so you can find us. You can search TNT Financial Solutions, and you'll be able to find us as well.
Awesome. And you brought up tax strategy, so that's perfect, because that's going to be a segue into Jack. But before I get to Jack, question, tax strategy at this time of the year, is it important? When should I, because I'm imagining your relationship with my tax accountant is important too, not just
Absolutely.
Being a bookkeeper.
Absolutely. So, I mean, in my case, I'm like an all-in-one because I do taxes as well as bookkeeping. Sure. So when it comes to tax strategy, that should be done at the beginning of the year. It should be done at the mid of the year, and then at the end of the year. Okay, because things change with your business. So as your business change, as money goes in, we lose a contract, we add a contract. As you're sitting down with your tax strategist or your tax professional, those are the conversations that you guys should be having, right? Your tax professional or even yourself should be like, hey, I'm working on this really big contract. It's going to bring an inflow of cash into the business of $100,000. What should I be doing? So when we know that we're getting ready to bring an inflow of cash flow, you need to be like, hey, I need to sit down and talk with you, depending on if it's going to bump you into a new tax bracket. Because at that point now, we need to see how we can get creative within the law to help you save some on taxes, right? So if we're not being strategic and our business does make $250 and we have no strategies in place, then at that point, guess what? That $250 now bumps you into a different tax bracket. We now have to make sure that you, Uncle Sam is going to say, I want my piece of that $250.
Exactly. And then, obviously that brings us right to Jack. What's the best first step to fix a bleeding entity structure?
Well, I guess I need to know a little bit more about the bleeding structure. So what I can say, and hopefully this answers Jack's question, right now we see an influx of people switching to be taxed as an S Corp. Okay. We hear it on social media. You want to save money, switch to S Corp. But there are parameters or guidelines in order for the IRS to respect your S Corp, because they can't take it away from you. So your business has to net $40,000 within that year. You have to, when you switch over to an S Corp, you must be on payroll. These are requirements. You cannot just switch to be an S Corp and you just started your LLC. You haven't even made any money. Okay. You're not even on payroll. So these are things that your tax person, one, if they're recommending that you switch, that they've already looked at your books to say, okay, you're netting 40,000. Matter of fact, you're netting 60,000. It makes sense now to save in that 5.3 tax percentage, which is the self-employment tax, right? As a single member LLC, you get taxed the 15.3 self-employment tax. When we're taxed as an S Corp, that goes away because now you're paying taxes into the federal government, MECA, FICA, as well as Medicare. So you're paying taxes into that. So it eliminates that self-employment tax. But then there's also other strategies that can be in place. So I guess I need to learn a little bit more about fixing the bleeding entity structure. I don't know if we're saying we switched over to S Corp and we don't have ourselves on payroll. We don't, we're not netting the right income. You can switch it if that's what makes better sense. So I hope I answered that.
No, I think so. I mean, the only thing I would elaborate on is, Jack, if your company, if your entity, right, I'm taking entity meaning company, and your company is not doing well, I think that's when you have to tighten up the waistline. You really have to be on a strict, budget. And you really have to, at that point, know exactly what's coming in and what's coming out. Not to mention, obviously, the sales have to increase.
Correct.
Whatever widget you're selling, you have to make more money. So the focus has to be, I have to sell more, whatever you're selling, to make it happen. But then you really have to be diligent enough to know, like, hey, I got to make sure I'm just carefully monitoring and watching what is going in, what is going out of my business. Because a lot of times, if you're careless, you're going to get yourself in the red. And it just like anything, almost like to credit, Vince, it's so easy to get stuff on your credit. It's so hard to get it off.
Yep.
It is so easy to get yourself into financial ruin or trouble, and it's hard to get it out. I mean, that hole is just, man, you got to dig.
Yeah, if you're not paying attention.
Correct.
Yep.
What I will add to that really quickly is subscriptions. Okay, I know it sounds very small. It sounds something very minute, but a lot of money, thousands upon dollars go into subscriptions. As an entrepreneur, you get all of these wonderful emails. Hey, try this, try that, try this, free trial here. And we never cancel when our period is over. So now you have $9.99 coming out here, $29 coming over here, $39, and it adds up very quickly. So I have a client, I have a client that I had to help her. She made a mistake and put her business card on her Apple account. Very easy can happen. She bought something for her business, forgot to take her business credit card off her Apple account. And every time somebody purchased something, it was going for, being charged to her business credit card. And I'm like, what are you buying? Like, what are you doing? I seen the charge. It was like 7 charges in 1 month from Apple. She was like, oh my God, I forgot to take it. So it happens very quickly. So managing subscriptions are huge. If we're trying to see if it's going to improve your customer experience, by all means do that. But if it's not giving you the results that you want, cancel. Same thing with your bank. Your bank works for you. So if that bank doesn't have any incentives, if you open up a credit card with them and it's no cash back, there's no zero, interest, look to see what banks can help you in that space to try to manage how you're using your money. So every dollar that you spend, see if they can give you $1 back. That's money that will help save and help pay down that credit card bill too once you get your rewards.
It's so hard when you talk about that because, especially like for me and Vince, we try to preach loyalty, right? We want them to be loyal to us as a client. Hey, I'm going to do right by you and you're going to do right by me. Let's work together and let's attain your goals and your dreams. But at the same time, it's kind of like we're individuals. So I guess it's okay. Let's be loyal with individuals, but loyal to these bigger entities. Yeah, we probably need to get away from that because they don't have your best they don't have your best regard. They're out there for themselves. It's a profit that they're trying to make. And those margins are just kind of ridiculous. So, I really feel like, to your point, we have to be more mindful. We talk about homeowners insurance. Yes. I mean, it's like, hey, it's a dime a dozen. Just get hopefully you're going to get one that, obviously is going to pick up the phone and respond.
Yes, please.
Don't just get the cheapest one.
Right.
Please don't.
You can go back into that. I just wanted to throw that in there.
Right.
Don't just go get the cheapest one.
They got to respond, but at the same time, the loyalty, I question nowadays on homeowners insurance because, these companies are making decisions that best suit them and it may not be them. And it's like, I've been with my insurance agent or at least the agency since like I was 19. I'm like, hey. That's like almost, I'm coming on 30 years. And it was like, and, but it's just, there is a comfort level that you get with anything that you do. But at the same time, it's like, hey, does he have the best? Is he looking out for me? And if that's going to affect my bottom line, these are the things that, hey, what's my first step? You got to check your budget.
Very much so.
I was talking about when we started the show, I just got off a meeting before this one, and we were talking about the new software. We're going to get some new mortgage software for the office. And so this software is going to have the ability to send out emails. It's going to have the ability to do some interior e-signing capabilities and stuff like that. And another one. So I was like, man, I can get rid of my DocuSign subscription. I can get rid of my, I tried that auto.ai. I thought it'd be real neat to like record all these things. And then like after 4 months or so, I'm like, I don't really need these notes.
I'm laughing behind here, and I just totally want to. I mean, granted, I know we're going to get into tech, right? And I like a little bit of technology every now and then, right? And we talk about expenses. I spend about $800 a month on business-related software.
Got it.
For my own personal usage, whether that's my CRM, leads, retention, however we want to call it. And I know me and you have talked about this. Social media is the new CRM. It's just how you do it.
Correct.
Right? And so again, I like the toys. I like the gadgets. Kind of to Jack's question, just on my real quick here, and taken from what Yolanda told us, as soon as you can take some form of a salary from your business, I think you should take it.
Yes.
And if you, the first and foremost of any business, if you're bleeding, the bleeding needs to stop. And I'm not just saying that as that, but you have to do whatever it is before you're getting new customers. You have to stop the bleeding. You have to figure out what that is or what caused that bleeding. And lastly, don't commingle your personal with your business bank accounts. I mean, that's just basically a couple little things here. I know we're going to segue into different things. So I just wanted to kind of throw that out there.
No, I appreciate that, Vince.
Very good.
Want to definitely thank you, 𝐒𝐈𝐍𝐿, for saying those nice things about Yolanda and Vince. And that's what I'm trying to do. I'm just trying to bring people here to have a good conversation, and that way we can hopefully educate you and stay hungry for knowledge. That's the whole goal of Epic Lunch and Learn. So thanks for listening. Jennifer wrote, if you had to start over as a loan officer, what would you do differently financially? Vince, I'll let you tackle that.
Take care of your IRAs and your 401ks if your company has one as a loan officer. To me, it's always use your Roth is great, but I feel your traditional is better. I'd rather pay taxes today than tomorrow because I can always go and use it as an emergency savings fund as well. And I don't have to worry about taxes later in life. So I'm always traditional before Roth, but then again, it's everyone's preference.
And that's why I love you, Vince, because I'm Roth before traditional. So we're always on the same accord.
Yeah. I mean, it's best though, especially when even sitting down and planning from a small business owner, right? We no longer have the option of a company providing that service for us, right? We don't have a 401k. We don't have a traditional or even a company offer. We have to initiate that. So those are things to help from a small business owner. It helps to bring down your tax liability if you do contribute to one. But again, understanding how that plays a part in what you're trying to do to eliminate taxes. So that's where my mind goes when it comes to those entities, understanding how they're going to work for you. I tell people, again, those that are W-2, they work for you. So whatever company is managing those buckets for you, they work for you. So go in and ask questions. Where's my money going? How is it growing? What is the return on my investment? Because a lot of people just put money in there and they just let it sit and not realizing that if you're not managing it appropriately when it's time to retire, and Uncle Sam needs to take his chunk, as to what Vince is saying, we don't know what the tax bracket is going to be when we retire, right? Unless you're getting ready to retire this year, then of course you know it. Or even, while we still have Trump in office. But after that, we don't know. So at this point now, you'll know what to gauge it as. But if you don't know, do what's safe, put money where you know it can grow and how it's growing. So that way it'll benefit you in the end.
That's why actually, Vince, I thought you were saying Roth first, then traditional, because it's tax free. Well, I mean, but you're getting
taxes now.
You pay the taxes now, and then later it's tax free.
I don't want to cut you off, but I had to. You have an investment background as well as the mortgage side. I know you don't asset management anymore.
Yes, sir.
I follow the traditional day trading role, right? So I sit there and trade the market and different things like that. So we can always go back and forth on those things, right? But I like the standpoint that I can get back at my money without penalty if I needed it as an emergency. So that was one of my bigger things. And the Roth has cutoffs
Right.
in terms of your salary per year. So, I mean, just everything's different financially on that.
Yeah.
And other things too, if you have an LLC and an S Corp, remember, you can set up your own 401ks. So a lot of time people don't do that. So don't want to turn this into that. I know we have a couple other things to kind of touch on, but we could do this all day long and talk this.
No, 100%. I read the book Power of Zero, and so that really
amazing.
The Power of Zero really changed my whole perspective on just what I want to do from a financial perspective. But I mean, it still goes on to what Jennifer's talking about. I mean, what would I do differently? I probably would have saved more, right? I mean, you just sales in general, as a loan officer, you're in sales. That's the industry that you've chosen, and it's cyclical. And unfortunately, no matter how we all have egos. We all have, hey, I got the master plan. I'm the best salesperson ever. Whatever the case is, it's still cyclical, and you don't control it. You can't control if the interest rates are 2% or if the interest rates are 10%. You only can offer the products that are available to you. And so with that being said, when you can't control things and things are just happening, there is going to be well, I'll give you another analogy. They said business has seasons. And so sometimes when it's, you want to be that squirrel that has enough nuts in that tree when it's the wintertime.
Yeah.
Or you're going to be hurting.
Yeah.
You're going to be out in the cold trying to search for some nuts. So, if it's always for any loan officer, it doesn't have to be me starting over, or if anyone was starting into the industry, make sure you're saving enough money. Make sure you're keeping enough for a rainy day, because the rainy day is coming. You don't know when it is. And that's the hard part about our business, because every year is a different real estate market. And so I can't tell you what the market's going to be in 26. I can give you a perspective of what I think, but it's not what I know. And so you always have to be ready and have money saved up in case it goes awry.
Two things. You're nuts if you want to get in this business. So come on, join. It is what it is, right? And the one point on that, and I'm sure we're going to transition into a little bit more, there is no business without clients.
Very good.
Right? And that financially, you can't prepare for that because you don't know what happens. Rates dry up, people don't move. So it is preparation and all the other things that go with it.
Yep. When they say preparation meets opportunity, that's called good luck. Incredible insights being shared. Thank you. Thank you, Justina. Appreciate that. That's what we try to do Monday through Thursday. And then great video. This is what every loan officer needs. Yeah, I hope so. I mean, Jack, if you are a loan officer, if you're working with a bookkeeper or an accountant, these are things that you want to be cognizant of. Or if you're running your own business, I think the overall theme today was just talking about things that, how to track your expenses, your P&L. And then also, too, I think is important to make sure that you're saving money as a loan officer. But right now we're headed, we're in spring season, if you had to ask me, and we potentially could be going into the summer. So it might get real busy, and it might be profitable to be a loan officer right now. So it's a great opportunity. But as we're starting to...
We're going into the fall, buddy. Your kids are going to school starting next week.
Man.
What are you talking about?
Hey, he's trying to push these rates down, and I'm like, okay, let's go.
Let's hit on, if we can. I know we talked about we were going to hit on some non-traditional product a little bit.
Yes.
And I know there was some questions earlier, and I kind of deflected. What are some red flags? So let's do something real quick. I know we usually try and keep this to an hour. Probably maybe if we go a couple minutes over, it's no big deal on my end. I have the time. I want to touch on a DSCR loan after. Okay. I want to hit the bank statement loan. I'm going to do this real quick. Bank statements are business bank statements, and Dante will go ahead and talk to some of them, and we'll talk about some of the back and forth of how the product works. But here's where your red flags could be, and I'll throw some things up as we're talking back and forth for red flags, and then Yolanda could kind of jump in to say, hey, how that's looked at from an accounting standpoint.
Yeah, okay. So let's go. So basically what we talked about earlier today is that, for most people, there's the traditional route, and that's tax returns. And then obviously what we offer here at Epic is a non-traditional route as well, which we just kind of define it as alternative income. And one of the key products that we do offer is a DSCR program, which is a debt service coverage ratio program. So most times when you're trying to buy a property, there's three categories that are always being looked at, which is credit, income, and assets. Those are the three points that we always have to review. What is your credit score? How much money do you make? And how much money do you have? And that'll help us determine what you're pre-approved for and what you qualify for. Well, with the DSCR program, it allows us to remove the income and focus only on credit and assets. So if you have, let's just say $100,000 in the bank account, and you have a credit score of, really 660 or higher, you're going to be eligible for this type of program. And this will allow us to, basically go ahead and purchase investment properties. So it's a great opportunity for people that want to get into real estate. They want to invest, whether it's a fix and flip product that they're looking for, where you're going to buy something at a lower price, fix it up, and then sell it for a higher price. We have that ability to do that. Or if it's something where you want to, set up your own Airbnb, which is, ultimately a short-term rental, we can help you do that. Or long-term if you want to buy and hold. So we have these capabilities where we don't have to look at the income with the proper credit score. It allows us to, and the assets, of course, we can buy these properties without having to prove our income. And it's a major game change, that, wasn't there 10 years ago. This is really just got into the marketplace, and now it's available to you guys. So, definitely an opportunity to take advantage of.
Yeah. What's great about that program is it treats the property as the business. Mm. It's how the property cash flows, and the same things go to what you can deduct for expenses and everything else involved. It's a fabulous program on that end, because you want to buy a property, you don't have the income, but you have the assets and you have the credit. It's a perfect scenario, but it's for investment. It's not for your primary residence.
Correct.
Go ahead.
Well, we do have a primary no income verified asset program, which is very rare in the marketplace. So, we're one of very few people that can offer that type of service. Right now, I have a customer in a tough situation where his wife passed away. And so she handled all the bills and all the expenses, and he didn't really pay attention too much. That wasn't his role in the relationship. And so lo and behold, the property got into foreclosure, and the property was bought by an investor. And so the investor now says, hey, I bought this property. It's mine. And, I need to sell this thing. And so unbeknownst to my buyer, he's like, well, I need to buy it back from you. But he couldn't prove his income because he hasn't filed taxes in 2 to 3 years. And it's a situation where it's like, okay, what can I do to get it done? And, unfortunately, he's not the best bookkeeper in the world. He probably needed your services, Yolanda. So, it was a situation where, the bank statements really couldn't get it done. He's getting paid cash from, odd jobs. And so, but we, with a good credit score that he has, and with the assets that he has, he's able to buy that property without having to prove his income, even though he lives in the property. So we do have that capability. But, to Vince's point, the DSCR program is meant for investment properties, where especially for short-term rentals and long-term rentals.
Let's touch
you want to answer, Will?
Oh, yeah, I'm sorry.
Yeah, Will, he chimed in. What's the first sign your business structure needs a revamp?
Oh, so I'll jump in really quick with that one.
Perfect. Thank you.
If you're bringing on a partner, okay, we're looking to have a partner, not an investor, right? Not someone that's just going to say, hey, I'm a silent investor. We're going to have a contract between you and I that I'm going to lend you this money. You're going to pay me back. But in an actual partner where it could be 1, 2, or 3 individuals that you're bringing into the business. Now you need to restructure. We have to actually get a restructure with the state as well to ensure that they're also on the articles. If your business is netting profit of that $40,000 for the year, now you can sit down with your tax person, your tax professional, tax strategist to talk through, hey, now we need to let the IRS know we want to now get switched from being taxed as a single member LLC to an S Corp. So there's a couple different things, just depending on what we're trying to do and accomplish to ensure that it may be just simply changing a name to a business, and we're talking about restructuring that way. So it's a lot of different things and a lot of different ways that we could go depending on what you're trying to accomplish. But if you're bringing more people in, they're going to take financial responsibility for that business, then that would also require that you need to change the structure of your business.
I love that because in my head, I always just think change. Anytime there's a change in a business, you might need to revamp something.
Yeah.
Let me ask a question to add to that. What about the EIN number? If you restructure, do I need to create a new EIN or can I transfer the old EIN?
You can transfer. You just got to contact the IRS to let them know.
Yeah. And just for the audience, EIN is employer identification number, just kind of like your social number.
For your business.
For your
and
business.
It's free. Don't let nobody try to charge you to get one. It's free.
Appreciate it. I mean, I didn't know people are charging for that.
Yes.
Great.
Yes.
So the other alternative program, I think Vince wanted to talk on. I mean, once again, we can do 1099s. We can actually do a P&L. We have P&L programs. We're going to try to get a lender on next week with us who can kind of explain some of these programs, Vince. So that'll be pretty cool. Stacy's going to be with us on Wednesday. But basically the one in particular was bank statements. So, with 12 months or 24 months of bank statements. Now, it has changed over the years. So the new rule, they will allow multiple accounts. They can allow like 2 accounts, if it's especially 2 businesses. It just gets a little murky because, to Vince's point, ideally it was meant for one business. Like, here, I have a business and, maybe I haven't filed my taxes yet, or, I owe, whatever the case is on your tax returns. But we can use your bank statements and use that as a source of income. And we just have to add all of the deposits and divide them out. But now over the years, we've recognized that some of these deposits aren't necessarily business oriented. And that is a red flag that we have to be cognizant of. Yep. Sometimes, if you got a return from Macy's, that's not business income.
Yeah.
If you have a tax refund from the IRS, that's not business income. Well, so we have to remove some of those deposits, or we may ask during underwriting, you got to prove that that is a true business income that you're receiving. You want to take that on?
That whole commingling thing, right? The red flag of an undocumented, where'd this deposit come into? Why is it $9,999 of a cash deposit, right? And that's kind of why I wanted to hit it this way, right? Because I didn't answer those questions that way, because to me the traditional tax returns, there is no red flags because it is what you file at the end of the day. In the bank statement world, it comes into a little difference because there's transfers. Like, I've had people, I Venmo that to so and so. It's my mom. I give her money every month. Oh, is it right? Underwriters are going to look for that. Or child support payments being paid out of your payment. Not necessarily a red flag, but something that could cause questions and could sometimes not allow you to be able to use it because now you don't qualify. So just kind of back to the whole red flags of where did deposits come from? What are the source of those deposits? And how much cash is coming in and out of those accounts too, because that's other issues as well.
Yeah, no, good stuff. It's funny. I have these outlines. Both you guys.
Yeah, they don't work. It's right here. Look.
Yeah, but you know what? That just means this conversation is to be continued. That's all that means. That we don't have to answer everything today. Obviously the information we provided should be more than enough to at least, if you have any more questions, how do they get a hold of everybody? So let's pass out that contact information. Go ahead, Yolanda.
Okay. Again, I can be reached at, if you search the web, social media, you can actually find me at T&T, like dynamite, T&T Financial Solutions. And that's on all social media, website, Google. And again, we're located in Beverly, 10031 Southwestern in Beverly, Illinois. Again, my phone number that I could be reached at is 708-539-2439.
Awesome. Vince?
Yeah, Yolanda, if you can, put it in the chat.
Okay.
You should be able to type it. This way someone has it as a reference if they watch it again, or they can just always go back to it. Me, again, it's Vince. My cell phone number, 708-359-8578. I work with Dante at Epic for Illinois, and my Epic email is vince@epic.mortgage. Feel free to reach out, ask questions. Again, this is, I'm here as a guest. I like doing this. It's fun. I know most of this is Dante's audience, but if you ever have questions for me, feel free to ask.
Awesome. And obviously, for people out there, the corporate office is 708-905-5300, 708-905-5300. You can reach me at Dante, DANTE, at Epic, EPIC.mortgage. And we're here Monday through Thursday, 12 p.m. to 1 p.m. Central Time. We're streaming on Facebook, LinkedIn, and YouTube. So you can definitely, check us out. If you have more questions, definitely call us. Everyone's individual situation is, unique to them. So, I mean, what we said and shared here today is more generalities. So we can really kind of dive into your unique situation and help you. So if you reach out to us, that'd be great. And this recording right here will be on our YouTube channel, Epic Spotlight. So if you go to Epic Spotlight, you will see the recording of this. I would encourage you to like it and share it with friends and family and coworkers that need this information. If you know a business owner or a young entrepreneur that needs a bookkeeper, Yolanda's right here. If you need, or if you know anyone that's looking to buy or invest in property or looking to refinance, we are starting to see rates, starting to come down a little bit, and we're going to go into that next week, just interest rates and how they are affected. Some people are like, oh, I heard rates are going to go down in September. Well, it's already being baked in right now. Take advantage of it now. Don't wait until September.
10 years at 4.25 and under. If you go back to one of our interest rates meetings, that's kind of where we talked about it. A little tease for next week. I know he just talked a little bit. We're going to talk about technology and all the gadgets that are out there in the marketplace for marketing for loan officers as well as real estate agents. That's my little tease. Dante will pick what day we're going to put the outline. We'll see where the conversation goes. Thank you, everyone, for being involved. Appreciate it.
Yeah, thank you. Everyone have a great day. Have a nice weekend. Thank you so much.
Bye.
Take care.
Thank you.